Welcome to the Month End, a CPG community chat. The Month End will provide emerging CPG brands real-life knowledge into the accounting, finance, and operational worlds. Our guests will be key stakeholders from those same brands, as well as other key contributors to the industry, all of which have vast experiences and insights that will be shared with the audience. Welcome to the Month End podcast, episode 18 with Steve Lutman. How you doing today, Steve?
Doing good, Brad. How are you?
Doing well. So Steve and Accountfully, I guess has a kind of a long-standing relationship where we've supported some of your kind of overall brands that you're associated with. So at a high level at this point, and I'm going to have you kind of detail out your background, but you're managing director of Tortoise and Bolt Marketing and Ventures. And then through that entity, we've connected on several kind of brands, right? Drink brands. Most recently, Hercules Mulligan, Flaviar exclusive ready-to-drink old-fashioned, which is great. Bondbreaker, the world's first Hefeweizen whiskey in Texas. And then the last company we're working with at this point is American Liquor Co., the first and only four-crop vodka. So exciting times. Clearly, you don't like to drink or deal with alcohol.
Right.
So excited to chat on the Month End podcast. Thanks for joining us, Steve.
Yeah, good to be here. Yeah, thank you, Brad, for inviting me.
For sure. So why don't we get started kind of on your history? So clearly you've been involved in the CPG kind of the brand space for a long time.
Yeah.
So can you kind of just tell us where you started from and kind of your life cycle from corporate world to doing your own thing to now Tortoise and Bolt and kind of just walk us through all that?
Sure. I grew up at Unilever in the food and beverage world. So I started in Europe as a trainee for Unilever in Austria, and then I worked full time with them in the United States, in New York, and the region. And I worked on the pasta sauce wars and Ben and Jerry's and Lipton iced tea, and I was there for 10 years. Also took me to Brazil, where I was there for 3 years as a marketeer, and then I moved after 10 years at Unilever to Diageo Moët Hennessy. LVMH used to have a Shefflin Somerset, a joint venture for luxury spirit brands, and worked with them for a few years in marketing. And then I realized, I created a few brands, or was involved with creating a few brands with them. And I realized I could probably do this myself, and was eager to kind of get out on my own, and created the Blonde LeBlanc Cachaça from Brazil, built a distillery, a craft distillery with some partners down in the middle of nowhere in Brazil, and launched LeBlanc in 40 countries. Did that for 12 years, and that was acquired by Bacardi in 2017. And then since 2017, Tortoise and Bolt, it's basically a way of me finding opportunities and creating new ventures. And the three brands that I'm working on now, Hercules Mulligan, Bondbreaker, and American Vodka, are just all unique individual, propositions and opportunities that are, very, very attractive to me. And each one of them has their own challenges and unique sales propositions. And, I'd say they do have one thing in common, is we're working with you on all of them, which is fantastic, because it allows us to scale, and it gives me one common process to work across all three, that we can learn from one, what works better on the other, and just have a common practice across all three brands.
Yes, and we definitely enjoy you as clients across those three entities. So, kind of as we go back, what was the major in your background is marketing, correct?
Yeah, I'm a marketeer that dabbles in everything, Yeah.
Gotcha. So from back in the day in the corporate space, then moving on to your own brand, LeBlanc, what was the biggest transition from the corporate world to small business entrepreneur doing it yourself? Because I'm sure there was 15 different, I have to do this, I have to do that. But what was like the biggest shock factor or change, or maybe it's a couple?
Sure. Fundraising. I mean, you realize capital, when you work in the corporate world, in the big entities, yes, you have to raise money internally. But when you're in the incubator space, when you're in the early stage of a brand, you're living hand to mouth most of the time for the first year or two, and you have to go raise the money or use your own, and bootstrap everything. You don't have an R&D department, you don't have an accounting department, you don't have anything. You're doing everything. You're faxing, and you're selling, and you're raising. So, but raising money, I think, is really the sea change, and it makes you grow up real quick.
Yeah, yeah, I'm sure it does. So from your and interesting, I mean, if I'm looking here, 2005, you created this brand. It's now
Hmm.
2022. Technology's completely changed
Wow,
everything, right? But
everything.
you know, back in that space when you had to raise money in the 2005 to 2010 range, right?
Hmm.
What was a couple of kind of pointers, I guess, to an entrepreneur of things to think about, but then also now that you're on the other side of the table now, possibly, right? Looking at brands
Hmm.
and finding partners who are bootstrapped, like, I guess, tell me kind of the different mindsets of them from where
Hmm.
you were and now where you're at, and kind of benefits or positive recommendations or just kind of information that'd be good
Sure.
for the emerging brand owners.
Yeah, when you're starting out, you don't know what you don't know,
Mm-hmm.
and trying to fill that gap with people that know is really important. And getting that Rolodex, and getting advisors, and getting people that can shortcut you, in terms of getting knowledge and capability and information is really important. The thing that's really different today is what I call the gig economy. Back then, there wasn't this robust a gig economy, so you wouldn't even think of 1099ing people. It was not even, it was weird. Can you work part time, or can you work? It was. Now Plan A is the gig economy. Plan B is full time. You don't have to, you think about the talent you can get, at all levels, at the high levels. You can get, class world class talent in the gig economy that you wouldn't want to raise full time, hire full time. So that's the biggest change of all.
It's so true. The fractional world versus the full-time world, 10, 15 years ago.
Yeah.
Um,
And the pandemic just accelerated. I mean, everyone, I think, we were moving in that direction, but the pandemic taught a lot of people that, you can work from home, or you don't have to work in an office, or you can be virtual. And I think it just accelerated the gig economy, the
yeah,
1099 thing.
definitely. We have a, I don't know, handful of clients that are international. Is there any weird, like, from you being in Brazil with your brand, like, is there like any different, and again, this could change then today, but just, is there anything different in terms of how like Brazil operated versus the US, or is there any nuances if there is brands out there that, are international, or some US, or some,
Hmm.
international, some domestic?
Yeah, it's a different culture. I mean, it really is. It's a relationship culture, which is very endearing. It's fun. I mean, you get to really know the people you work with. People take the relationship there much more seriously. It is more inefficient in that regard. I mean, there is that factor. There is also, there's the the payola issue that you have to deal with in certain circumstances, which, you do have to do here, but it's all above board. There's a lot that's, below board that as a gringo, you don't even know how to deal with it. Like, what are you asking me? You don't even know. And certainly the language. I mean, you always assume everyone works in English, but, they don't. No, I mean, in Brazil, for specifically, you have to work in Portuguese.
Fascinating. Just a different
Yeah.
culture, different lifestyle.
Totally, totally. And there's
Yeah.
always a weird thing, like for example, on LeBlanc, we age our cachaça in, XO cognac cask from France. And so, we brought in a 40-foot container of XO cognac casks from Cognac, France, and it got to the port. And what we didn't know is that you can't import used manufacturing equipment into Brazil. It's illegal. You have to buy new. They do it for their economy. So literally we had to send them back. We did find a workaround, which is, we got them back and we sanded the outside of the barrels so they look new, and send them back. Say, oh, they're all new barrels, so we got them in. But there's always a weird thing like that.
Mm, yeah, yeah. Different
Yeah.
nuances come into
Tax
play.
regime, all the
Yep.
the
Yeah.
taxes are, it's different. Not that it's more complex than here. It is complex there, but same thing. You need, need some people that can help you that know what they're doing.
Definitely, definitely. So moving on to Tortoise and Volt. So give us a little more background about, like, the firm, and
Yeah.
the goal of what you are. Clearly, we've identified some partnerships that we collaborate on or we work with you on. But do you work with other brands? Like, what is the core service, and what do you want to do with that company?
Yeah, so it's a marketing and ventures business. So it's consulting on the first and foremost consulting for other brands. They're usually very quick in and out projects. We do concepting, we do brand identity, and then we do business strategy. That's our core service. Obviously, our footprints in CPG and beverages and bev alcohol certainly is a specialty. But I really do it to create opportunities that is on the venturing end. So that's the focus. And I've been fortunate enough to have three really exciting projects come out of Tortoise and Volt, where I'm either the founder or the fractional CEO. On Hercules Mulligan, that started from reading a book in 2015, which, as you mentioned, I partnered with Flaviar on. American Vodka, I had the good fortune of meeting some great guys, the founders, and creating that brand in the Midwest. And then, more recently, Bonbrecker with some really great entrepreneurs based down in Texas, and a country music singer named Randy Rogers. So, I couldn't be more fortunate in terms of the three ventures that I'm working on.
Awesome. So then for those specific three ventures, how did those work out to where you actually, became part of the core team and a founder and launching the
Sure.
brands versus your, more of your 1099 vendor relationships, your strategic relationships with other brands where you're in and out? Like, how did that
Yeah.
come to fruition?
It wasn't a straight line at all. It was just happenstance. Hercules Mulligan, literally developed that in 2015, and got it to a place where I was ready to launch it. But I had another project that I had to choose. I couldn't do both, so I had to find a partner with Hercules Mulligan if I wanted to keep going. And I was just grabbing a breakfast or a drink with Grisha Soba at Flaviar, and just ask his advice. I didn't know they were in the space of building brands, because they're a marketplace in the
Yep.
club. And then next thing you know, we're partners, and they have amazing capabilities, a great community, and they have a great marketing department and sales department. So we launched it direct to consumer during the pandemic, right before an evacuation date, November 25th, 2019, and proved concept over 2 years. And kudos to them. I mean, they did an amazing job. Now we launched in New York. I hired the sales team, and an ecosystem, really bring that forward. So that one, I founded the brand, and very fortunate to take direct to consumer during the pandemic, because who would have thought?
Yeah.
Whereas American Vodka, was introduced to them through can't even remember how I met these guys, but they were looking for someone to lead the project. And initially I said, "You guys are crazy. It's a vodka. That is very hard to do a vodka, as we all know. I mean, it's very commoditized." But one, I really liked the founders and the partners. Just said I can learn a lot from these guys, and this project has a high level of difficulty. And I like the initial thought, the design, and started working with them. And I think we cracked it with this 4-crop vodka blend approach. I mean, we call it the vodka whiskey lovers. Totally different approach to a vodka, where most vodkas are in silos. And we found a way to blend 4 different crops and create a different tasting vodka. And then on Bonbrecker, it really was through services. I was providing the services of naming and concepting, and then brand identity, and really hit it off with these guys. And these guys are really smart entrepreneurs, not from the industry, but you wouldn't know it. They're all working different aspects, different industries completely. But we hit it off, and more importantly, it's in my wheelhouse. I'm a concept brand guy. It's a lifestyle brand, and this one's a destination brand. I mean, it sounds funny, but it's from New Braunfels, Texas, but it's very similar to LeBlanc. where it's a destination. It's a place in a bottle, and it's the spirit. Not in terms of the liquid, but it's the spirit of the place. So we're all three brands are now in market. We're focusing Bonbrecker in Texas. We're American Vodka is in the Midwest in 6 states, and then Hercules Mulligan's national via direct to consumer through Flaviar, but now we're in New York City and killing it. I mean, the brand is, I just pinch myself. I have significant imposter syndrome, and when people tell me they love the brand, I'm always and the product, I'm like, really? Are you sure? And that one, they're just ecstatic about it. We got some magic in the bottle there.
Yeah, I think all three of them are very cool brand concepts. So good work on all that stuff. So moving on from this marketing venture, creating a product. So now you have a product, or now you have a brand or a concept. Now we need to go to market. Now we're a small business. We need to raise money. We need to get inventory, supply chain. So let's kind of walk through the core kind of facet of this podcast: operations, accounting, finance. Number one, let's just focus on operations, inventory. Kind of like how do you source? How do you manage your inventory on these brands? Just kind of walk us through that process.
Sure. So everyone's different, but typically I look for partners, on the production end, and the more capable, the better, and the more capable, the greater the commitment level. So, on one of my projects, one of my production partners is a co-founder. He became an equity owner, skin in the game, and therefore took on all the development and the working capital, which in this business is extreme. The other 2 projects, we just found some distilleries local that had the capability, had the attitude, the mindset, and we work with them. Typically, we do all the purchasing of our ingredients. We own the formula. We do everything. So we're almost like renting their facility. It depends on their capabilities and how deep they can and want to go. And then that there's 2 challenges in that world. One is the product development. You gotta get expertise to help you with that, and then the buying of the ingredients and the packaging, and the cost is just enormous. How much you have to, just your glass and your packaging and your labeling and your cork and your shipper, and then that's not even getting to the liquid.
Mm-mm. Yeah, understanding your costs, understanding your fully loaded costs. You need to know that before you get to the pricing of it. So, how do you manage, or not manage, but just work with different people on these ventures? Like different founders, different teams. We're here at Accountfully. I have my team, but I have clients at the same time. Like, you're basically running 4 businesses here with your marketing venture, and the 3 businesses that are together, that are inventory based. These brands we're talking about, finding partners that you can work with, but at the same time, this founder here may have a different mindset than this founder over here. So how do you challenge, or how did those challenges work together? And this is normal for a small business with various partners anyways, but how do you kind of work through those aspects?
Yeah. I mean, the good news is the challenge is the same, and you can use what you're using in one business for the other business. And, there is best practice, and there's tools. And there's also talent. So, I mean, not only do I work with you guys across all 3 businesses, but I work with others across all 3 businesses, where and when it's relevant. Or, modeling to me is a really important skill set in innovation. Financial modeling, supply chain modeling your sales versus actuals. I mean, all those tools are really important. And there's an art and a science to them, and the better they are, the better you are. I have gotten better and better at modeling, and and then I use them across all 3. And every single business is going to have a different situation in their model. So you may learn something in one business, and you say, "Oh, I'm going to use that on these," and now that's how you get better. Yeah.
Gotcha. Yeah, 100% makes sense. From a modeling perspective, like what is your workflow for modeling? Like every month, every quarter, do you update it or do you review it? Do you have any best practices of just, the model that, process that you use?
Sure. Yeah. So it's an animal. I start out, pretty bare. Get a lot of tabs. I mean, I walk through the P&L. Every line items is a tab, or they can end up becoming their own model, like working capital, supply chain. I do monthly, 5-year monthly, and then it breaks down to an annual. But I just do. I have to. And then I walk through the P&L, and then I continue on to working capital, and then what's the what's the capital requirement, all the way to outcome analysis. What's the return on investment? What's the Series A, Series B, Series C? And I build that, and I'm always using it. And we'll use that for the operating plan for the year. Give it to you guys so we can compare actual to plan. But I tend to update it quarterly in some regard for the operating plan, and then annually for sure.
Love it. Yeah, it's interesting. The models, you can have templates, but the next thing you know, there's 65 more tabs on an Excel sheet, or 5,
Totally.
just like, I need a tab for this. So it's always, they're very individualized. And that's kind of, for our clients that have a model, I'm like, don't just pay somebody to have a model and then just to raise money and don't use it. You need to understand the inner workings of it. You need to update it consistently, whether it's monthly or quarterly. You need to assess against it. And you can literally use it as a tool to forecast scenarios, to your point. Like, when will I run out of money? When do I need money? And what is the amount of money I can get? And then that saves the day in terms of just being proactive of, like, maybe I can get a cash flow loan for 100 to 150K to bridge these 2 months versus other scenarios that you have to give equity on. So it's all about that scenario planning and analysis. Initially, when you talked about, raising money is the hardest thing as a brand owner, with these brands that you're having here that you're supporting, Hercules Mulligan went through the crowdfunding equity route, or is currently going through that. So, how was that decision made? How has that process been? Just kind of give us a little more like thought, or walkthrough of that.
Sure. Yeah, that was an interesting one. So it's definitely related to the brand and our situation. I don't recommend to go into crowdfunding unless you really think it through and understand it, and also get some expertise. And we're fortunate. One of the people in our team really is very capable in that area. So, I mean, first off, we launched direct to consumer within the Flaviar community, and the brand did great. I mean, it was a hit. Quickly sold 2,000 cases, and the next thing you know, we're at 15,000. I'm sorry, 2,000 bottles. Next thing you know, we're at 15,000 bottles, 12,000 consumers. And then, we're getting to fundraising, and we're raising money from angels. And we said, well, why don't we go back to these consumers and ask them if they're interested? And we did. We didn't ask them for money. We just asked them if they were interested. And the reaction was very positive. So we decided to launch a crowdfunding campaign. Did a lot of analysis of who we use. We use Start Engine. And then we spent 4 months trying to figure out how to do a campaign. And that's where, this individual, Yaka, and our team did an amazing job. I mean, I can't even take much credit for it, because the Flaviar team did just such an amazing job here. And, I think we put probably, a best in class campaign together. And, our raise was 750 grand, which we thought was going to take 3 to 6 months. At least that's what Start Engine told us. And, we're oversubscribed after 3 weeks. In fact, right now we have a waiting list. We would have kept going, but we just don't need the money. So, because we also at the same time got angel investors within the rest. So it was an amazing experience. The key to it, I will tell you, Brad, is we had 12,000 emails and that we could go out, that people consumed our brand, and we were already beloved, and if we didn't have that, we would have to go find it. We'd have to do paid media or something. We'd have to get a list.
Yeah, definitely. I mean, it's leveraging your network, your connections, your brand loyalty, numbers, etc., is really key if you're going to go that route. again, it's just crazy the different routes you can go to these days with getting money, whether it's debt, loans, short-term loans, whether it's crowdfunding equity, whether it's the
Yeah,
traditional angel investing, friends and family, and then you get to the end of SBA loan. It
yeah,
spans the entire spectrum now, and it's never
it's
been
true.
easier to get money. But you got to be careful in terms of where your money is, what the terms are, what you're giving
Right.
away, and all that stuff, which is key for founders. So
What's exciting about this is now we have 800. I know you have Mark Levitt on your channel, and Mark calls them investors. Your
yep.
crowdfunding people are investors, and obviously they're consumers, they're investors, but they're now brand advocates and ambassadors. And what more could you ask for?
Yeah, I know a lot of people in the world don't want to be an entrepreneur or be a investor. They see all these cool things like, oh yeah, if you got in on Amazon or things early. Well, now these people are actually, they're hey, I have equity as a friend, this is my company, or I'm an owner of this company. And it's interesting, the mindset of just normal people out there. And then when they do that, then all of a sudden they buy it, or they buy it for their friends for holidays or birthdays. And it's just this kind of this very cool kind of brand investor, brand loyalty person that's just there to support you. So it's super cool in terms of that type of relationship. So I'm glad that that's went well. So outside of that, as we kind of are nearing towards the end of this, from a sales marketing perspective, that's your brand. Like, how do you assess, what are some of your key metrics related to sales in terms of, top line, profitability of sales, et cetera?
Mm-hmm. Well, the first thing is, on the actual operational front, we look at, what's our account sold? How many accounts are we in? What's the repeat order in those accounts? Really important. What's the quality of that repeat order? What's the conditions in that account? Certainly pricing is important. How much discounting do we have to do, if any? And if we are just doing discounting, hopefully it's based on volume buy. It's a bracket price discount, not just, a pay to play. And then, what's the quality in terms of on-premise and off-premise relative to our business. And we always say in the on-premise you build a brand, in the off-premise you build a business, and that's where you really can scale, is in the off-premise. Very expensive in the on-premise to do business, so we do look at splitting out our sales that way. And right now, we're a small brand. We're not meaningful to a distributor, so we have to put our own sales team, our reps, on the street, which is a big cost for us. So the measuring of the deal flow and the sales pipeline for each other sales rep is a complicated area. Right now we actually do it via Google Sheets. We're going to move to an online CRM tool. We're going to use one called LilyPad. But in the beverage alcohol industry, where you have a 3-tier system and a distributor, it's a little more complicated than when you're direct to consumer with Amazon and can see everything.
So true, so true. My background originally in small business was when I was working at a big accounting firm. I went to become kind of a first accountant controller for a family of wine businesses, and they were set up in that manner to, when's the wholesaler, when's the supplier, when's the broker, and I'm like, what is going on here? And that's when you learn the old the 3-tier system and the different requirements of each state. It's a completely different animal. But they have people and partners that you can partner with to help the compliance needs of all that. So
exactly.
So anyways, kind of wrap it up here. Kind of the final kind of 2 questions we have for you, Steve, and then we'll chat more about your brands afterwards. Tell us one CPG industry do.
I think the most important thing is you got to get your concept right. There's in VC speak, you always talk about risk, and there's 3 types of risk. You got concept risk, you got execution risk, and you got financing risk. And I always believe the concept risk is the critical one. The more you can go to town and get your concept right, your packaging, your product, everything that relative to your proposition, execution, it will take care of itself. You'll attract the talent, and you'll attract the money, and you'll figure it out. But I call Tour This Involved because I think you gotta think slow and act fast. And the part you gotta think slow on is on that concept. You gotta really know the brand name is critical. What is your differentiating? What's your point of difference? is your product good? It's got to be amazing to succeed. So, I mean, that's the do. I mean, that to me is huge.
Yeah, definitely tell where you come from in the sales and marketing and brand development world.
Yeah.
All right. What is one CPG industry don't?
Don't get over your skis. Don't fall in love with your product. Make sure you are, certainly you can be passionate and you can internalize it, but you got to separate yourself from your product. And as a founder, you can't get too attached to it. You have to look at it objectively. That's why it's important to have, people like yourself telling you, another point of view. And just don't get over your skis. Go listen to your consumer, and keep in mind, people are going to tell you what you want to hear. So try and find out what you don't want to hear, and just don't get over your skis too far. Especially when it comes to expansion. Start small, prove concept, and then expand. Don't try and rule the world. We're not on Shark Tank. It's not as sexy and as fun as you think it is, especially when you fail. So, just be an adult about it and don't get over your skis. Really just try and go through it sequentially. If you do, you'll that's how the big successes work. I mean, I always look at Tito's, and it's a 30-year overnight success,
Yep.
But what is success?
Yeah, I couldn't agree more with that information. So good stuff. All right, Steve, really enjoyed the chat. So where can people go
Always,
find these products?
Yeah, so Hercules Mulligan, you can buy us online. All three products you can buy online. Hercules Mulligan, go to HerculesMulliganCompany.com. American Vodka, you can buy at literally www.americanvodka.com. And Bahnbrecher is at bahnbrecher.com. BAHNBRECKER. So go online and you can get delivery right to wherever you live.
Love it. AmericanVodka.com was available, huh?
Yeah, we got it. Like we had to pay for the URL. It was but I'll tell you, it's worth it.
Yeah. No, I think simple brands like that speak to a big chunk of society these days, which is awesome. It's like simplicity in the brand name. That's, I think, what it comes down to when you're saying killing the brand or getting that brand concept right. It's like making it not too complicated, but simplistic, but very sophisticated. You know what I'm saying? You're like, wow, that's right. Cool. So awesome. Yep. All right. Steve Luttman, episode 18, Month End Podcast. Steve, thanks so much for your time. Again, he's the director of Torsten Bolt Marketing Adventures, and you can find him anywhere with these three brands. So Steve, thanks again, and really enjoyed the chat.
Thanks, Brad. Likewise. Take care.